Good morning, traders, and welcome to the first trading day of July, the first day of the third quarter, and the second half of 2017. This year is really flying by. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Chris Dearborn. He's the Managing Director of the Markets Intelligence Desk, and our focus today is going to be on burgers and beer, because why not, Chris, going to the 4th of July holiday? I think we're one of the only people around on Wall Street or Times Square, but nonetheless, let's quickly kick off with forward thoughts going into July, because even though it's a slow week, we are coming into this full steam ahead.
Absolutely. You've seen a fair amount of consumer staple names in the news recently, especially with the Amazon Whole Foods merger going through. You've actually seen Amazon trade up on the news, as well as Whole Foods trading above that price out of the gate. So what you're looking at really there is people are looking at what is this going to mean and do. Amazon really hasn't come out yet with what they plan to do, but there's been plenty of speculation from whether they're going to be in the brick and mortar space on that, or if they're going to look to scale up on their customer base. So it's got investors kind of excited about everything right now on that space. Unfortunately, what that did do was hit some of the other food stores in the space and knock them down significantly. Regardless of what happened and the outcome would be, the whole point is that people are looking to take really an M&A stance in stock to really create alpha, and that's what that's looking for. And on the Amazon side, as they're such a great operator, really have scared or spooked some of the other larger names in that space. And what you've had there is that they caught really a movement from the top to the bottom, and I think that's really where we are right now. So you're talking about burgers and beers, you're talking about consumable names. This summer, people are going to keep buying, keep shopping like they normally do. The Q4 on the retail side is really where you want to be, but the consumer staple names, where we are right now, is that you want to look at where the spend is. And you look at retail spend from last month, it was a little bit lighter, forecast a little bit less. You've got a number of other items that are coming up, so investors really need to take a look at the whole item. And then on a slow trading day like today, where the markets are actually ripping,
right,
it's a pretty good day to take a look at what's going on. So you've got indexes making all-time highs, which means that you've got the S&P, the Dow Jones, all made new highs recently. You just went through the Russell rebalance last week, a week and a half ago. You saw high volumes there, but not a lot of price movement in the stock. So really, where are people putting their money? Where are they going to with this? The M&As are a great way to take a look at what's going on in the space and kind of get a judgment of what's going on around them.
Right. Well, it's interesting when we talk about pricing power, because we have a key data point coming out this Friday, the employment report. And it's not necessarily the number of jobs that we're focusing on, it's wage increases, because we are not seeing that, and that directly affects consumer spending.
Unemployment numbers have been historically low. New files that come out every Thursday have been below 300,000 for a significant amount of time. You're talking over 100 plus weeks, and it hasn't been like that since the 1970s. So what you're looking at there is people are working, but they're just not getting paid what they need to get paid to make a good living. So people, whether they're spending what they have, whether they're saving, whether they're paying down debt, it's the wage growth just isn't there, hasn't been there. So something's got to give. Either the jobs have to be created for the people, or the salaries have to go up. And right where we are right now, it's just not happening.
I read something really interesting last week, and I can't remember if it was the New York Times or Washington Post, so I apologize for not being able to attribute it correctly, but they did a study on how the average American, with what they're making today, cannot afford the average car, which is around $33,000, which is not insanely expensive, because we have to also pay for all the technology in cars right now, but we're not seeing that wage growth where the average American family can't even afford to get a new car.
Wage growth is really where we have to focus on. A number of economists have been talking about this for a significantly large period of time, but people haven't really been focused on it, because going all the way back to the elections back in October and September, with a run-up into the November election, they were focused on unemployment numbers, not wage growth. And that's the issue that really is facing us now. All things are going to come to a head at some point. We got a couple of other important items as well. We get the Fed minutes out on Wednesday. That's going to give us a good look at how are they going to start to unwind that balance sheet. And there's a lot of skepticism about whether it's going to be able to happen in 2017 or not. So we want to see what that debate looked like in the minutes. That's going to be Wednesday. So that's kind of more important for the macro part of items as you're following the stocks along, because that could be some headwinds for the overall market. So we need to see what that does. So you've got M&A, which has been a nice space, kind of creating alpha. You've got some macro items coming in across the board here that can give headwinds to the market. And with the non-farm number out, we'll see what they're looking about, 177 there, give or take. We'll see how that comes in. Remember, last report was significantly lower than expected.
Well, it's also, we have had so much macro data to focus on, and of course, the daily headlines out of DC, but earnings kicks off on July 10th, and I'm kind of happy, even though it's a nutty time of the year for everybody, I'm kind of happy to focus on corporate data and something other than macro. It'll give us a chance to individually look at these stocks.
Absolutely. Earnings is really the bread and butter of this market. And as you see companies grow and expand, trade at all-time highs, you're seeing large cap names month over month making higher highs. And what you need is the macro data to support that. So we need to see, whether the consumer is out there spending. We need to see what they're buying. We need to understand what the companies are doing and how they're making a difference here. If they can if they can support this multiple that they have right now, you're looking at 12 to 18% growth coming in for the rest of the year. We need to see how they can do that, because we're trading already at all-time highs for a lot of these stocks.
All right. Well, thank you very much, Chris, for joining me as always. And Twitter, thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.